Good morning. Happy Friday. All right. New all-time highs for the Dow. Look at this weekly chart. Is this amazing? I mean, the depth of this move down last year was a bit deep, I think, for calling this a head and shoulders bottom. Nonetheless, I mean, well, this side of it doesn't look so good as that, but we've got more than, I guess, 2 years or so of trading range with a deep pullback and now making new all-time highs. And I mean, at this point, it's like, well, unless it violates the trend, some big news thing, I think the next target has to be, man, eventually, I guess 30,000, but we got to get through 28 and 29, of course. But, again, looking at things technically as we do, we've got several weeks moving up, taking out a prior high. So we always have to go back to our systematic analysis of how we interpret price patterns. So here, wide range bar igniting. We don't have a wide range bar ending on the weekly time frame. However, we have slowing momentum. It picked up a little bit yesterday, right? Well, even today, because this is calculating in overnight moves, of course. So a little bit of an increase in the range here from the slowing momentum at this prior high, and now a poke above the prior high. So now we have to stay objective, of course, going into next week, because I'm about 99.9% confident we're not going to trade below this week's low today. That would be our immediate line in the sand from an intermediate point of view. This week's low next week. As to say, as long as we stay above that low, everything's okay from this time frame. Of course, we'll look at this and say, well, the deeper, let's just get rid of the red line there, because it's meaningless at this point. We'll say, well, how deep does it go into this range next week? The deeper it goes, or if next week should become a red candle, that would be suggestive of moving lower, but not violating the trend. So let's just let's duplicate this line and just have our reference point of minor support on the weekly time frame, which comes right in alignment with this week's low. So minor support, major support, any pullbacks within this range, since there are no pivots here, would be acceptable for buying a pullback. All right. So at this point, the assumption is it keeps going higher because there's no technical pattern here to suggest it's not. But at some point, we'll get a red candle that'll suggest a signal of pullback, and then as long as it doesn't retrace too far, that'll be a buyable event. And so there's our intermediate term point of view on the weekly time frame. Going to the daily time frame, higher highs, higher lows. We did talk about slowing momentum yesterday, meaning here was a very strong move, little consolidation. The next move, got the red bar. So you can see, and this is what your indicator looks like if you're looking at them, right? It's measuring that, but you can do it with your eyeballs, of course. So the momentum slowed, but that doesn't violate the trend, right? There's our major support there. And now at the completion of this bar, right, this little program or whatever, EFT or whatever they call it in E-signal, will mark this as a pivot low. Since this is made, it'll have 3 higher low bars at the completion of that. And this will become our next reference point of major support when this is done. And this is the systematic analysis that we go through, regardless of whether it's YM, whether it's IBM, whether it's Apple, whether it's, some gold stock. Makes no difference. Systematic, universal to everything. So same thing here. The momentum slowed. So now, while that's a little bit of a warning sign of the possibility of a deeper pullback, well, that didn't happen this time. Right? Prices held here, and now they're pushing up. And what we would like to see, actually, since it held on this pullback, is it actually begin to accelerate at this point. Not necessarily a climactic type of a move, but we'd like to see, because of the slowing momentum here, we'd like to see it in momentum increase like it was here. So that's something that we'll look at and see if that plays out into next week. And the same thing in this time frame, that we then go down and just say, well, what's our first reference point of support in this time frame? And that would be a prior bar's low. And the same thing, do we retrace into that? And here, well, let's just edit this and make it green. What was resistance should become support, and pullbacks, right, should be viable, but it really shouldn't pull back at this point, because it pulled back here and now it began to go up. So it had a little pullback, excuse me, rest, and it really shouldn't pull back. If anything, it should go sideways and then continue to push higher. The hourly chart, maybe it's a little extended here, but same analysis regardless of time frame. Igniting move, right? Wide range bar igniting, consolidation, push up, right? So on and so forth. Now it's consolidating here. Let's see if this pre-market consolidation is a resting period before going high, or does the Dow here break down under that, leaving this as a little top on the hourly time frame that would suggest a little intraday pullback. So this is how we go through it in multiple time frames, right? As a intermediate term trader, who cares what goes on over here, or even on a slower time frame, like a 15-minute or a 5-minute. And over here, right, what happens here can have a little heads up as to a little pullback here, but it wouldn't change our bias, right? It would not change our bias whatsoever until that swing low was violated. And I suspect that's not going to happen, if it's going to happen, until next week. So that's the systematic analysis that we go through in multiple time frames, and that's applicable to anything you trade. Then we start going through other markets and see what they look like. Is there alignment between other markets? Are they moving together, or is one showing relative strength or relative weakness? So we know that the ES, or the spiders, or whatever you're looking at, as far as the S&P 500, that was the first one to make new all-time highs. And so there was the pullback. What was resistance became support. It's moving up. And this bar is active right now. We don't know what it's going to look like. But yesterday was an inside day, and now it's starting to push up again at a slower pace. We'll see what happens. NASDAQ, little relative weakness there. Let's just get rid of this down here for now. And so now, so far, it's holding what was resistance, becoming support, wide range bar. You know, yesterday was a go nowhere, little topping tail bar, but going sideways here. You can see a bigger consolidation on this 60-minute chart. So the question now is it building a larger area of support, which it kind of looks like it is, based on, look, the wide range bar down, no follow through, pops right back up again, kind of a shakeout. So can it now take out the highs, opening up the door to maybe 8,000, which isn't that far away? Or, you know, it's Friday, is everybody taking off here and we're just going to be bored to death all day? I don't know. But, you know, we'll see. But we've gotten intraday here, our little trading range going on here. So we'll see whether it can push up above here, or whether it's going to go down to the bottom of the range, where I would consider buying down there, since everything's in an uptrend for an intraday trade. But we'll see what happens if it gets down there. Oil continuing to move up a little bit, actually consolidating. It's green here, but actually, I don't think it should be green, right? Change from open. That side should be red, but just consolidating at the top of the wide range bar. Bullish would avoid up above. Weekly chart, not in an uptrend. So dealing with something like this, you can go with, but be a little skeptical, I would say. So misalignment of the weekly with the daily. If you are long here, you gotta, you know, out of the corner of your eye, you're keeping an eye on that exit door in case anything should happen here. But again, we systematic analysis of, the wide range bar. Does it go deep into that? And so on. Same thing. It doesn't matter whether you're going to trade crude oil, the ES, whatever it is. Now that's a hell of a nice run. And so now, same thing. Buyers on the pullback so far, can they create enough demand to get it back up to this relatively tight range here? So it's not a wide range. Whereas how far did it travel, right, to get down to that prior support area? In other words, is it climactic? Is it tired from that drop? I would say no, but it doesn't have to be in a bullish trend like this on the hourly time frame for buyers to step up and see if it can push it back up to the top of the range here. All right. Qs equivalent to the NQs. Let's take a look. Right. Lots of gaps. I mentioned this a few weeks ago that, this market is a little different. I mean, it's unusual to see all of these gaps in the Qs. It looks like an ADR. But market environments change. And, rather than like opening up in the area of the prior day's close, I mean, these are big gaps on this chart. So anyway, it is what it is. And just looking at reference points here in the Qs, here's our trading range. And let's just duplicate that. Bottom of the range. Got to turn it green or it won't hold, if it's going to hold. So, there's our range around 192-ish, just a little below. 193.50 up above. There's the little trading range. And just based on this wide range bar igniting to the upside in this consolidation, theoretically, this should hold. This isn't an uptrend. This isn't an uptrend. Made new highs, but we do have the same thing of a greater than 100% retracement. And based on that concept, momentum historically stalls. Doesn't mean it changes the trend, but being objective is about, this is bullish, but it's already made a pretty nice run. So a slowing in momentum does make sense. And probably the spiders, somebody probably wants reference points there. So bottom of the range, 298.25-ish, and new all-time highs. So we don't have a trading range here. And another way of saying, hey, this is showing relative strength because it's leading, but it's leading, at a slower pace. That's okay. Diamonds, same scenarios. Bonds moving down, right? They got whacked yesterday, but down to the bottom of the range here where the momentum has slowed. So bond bulls now need to see if they can hold it here, but that weekly chart says it's going lower, right? Topping tail, heads up. Topping tails can get ignored in an uptrend, and it initially did. Another topping tail, and if you're here day to day, that this is an area of price resistance to the left there. So now we got a big red bar on the weekly time frame. We'll see today if this can hold that area or whether it's going to go down. So we've got a 50 MA, simple. We got a pivot low there, and we've got a void below. So we'll see. Maybe this pops up here. Wouldn't make sense if it did. We'll see if it can move up, and that would mean yields are going to move down, and that might get equities a little uneasy, but we'll see. And gold, just trading range, still, the bullish view that we had based on that breakout. And maybe next week is time to get going. We'll see if it does that. Transports that we looked at yesterday, which was a concern with that big red bar. I said it needed to get things turned around, and it did. And so, we got the transports maybe ready to bring up the rear. We'd really like to see that happen. We on this head and shoulders top here, from the bullish point of view, we'd like to see these transports negate that next week and push up. And that would tell us that the markets, equities, are beginning to fire on all cylinders, so to speak. We're bullish alignment. The Russell, we want to see that. Also, you can see a little bit of that head and shoulders pattern here, but this kind of a sloppy bull flag. We can look at it like that, you know, the strong move up and where it's creating support here. And we'll see if this can get going here. Maybe it's a little gap up here. Can hold on to that and start to push up here. A little market internals were neutral. As you can see right there, the 5 MA of the put call ratio. So there's a disbelief in this market going up or hedging, which is a good sign. Breadth has shown a bearish divergence, but because this is a wide measure of what's going on in the market, you know, you got transports lagging, you got the Russell lagging, you've got mid caps lagging. So that's measuring that. So that's telling us, look, this market in a sense is not firing on all cylinders just by looking at this market internal, but it's in the upper half of the range here. It's neutral. It can get turned around. These longer term internals here got to a bearish level and they've pulled back a little bit. So internals aren't telling us, you know, run for the exits here. You know, actually still bullish. Deteriorated a little bit, and it's good to see sentiment deteriorate when you see the markets moving up to all-time highs, because, you know, the old saying that the market climbs a wall of worry, and that's a way of, you know, putting a measure on that saying, so to speak. Well, how do I know it's climbing a wall of worry? You know, just because somebody says so? Well, no, here's an internal measure that says that market participants are betting that this isn't going to keep going up. And it would make sense at a big whole number like that, right? Exactly, Howard, what Alex is saying. The tick is, if you just want to use one market internal, you don't want to look at trend, you don't want to look at an intraday AD line, you don't want to look at up-down volume, and all the other things you could look at as an intraday trader, NYSE tick is all you really need. You know, where does it spend the majority of its time? And you don't even have to look at it during the day. I mean, stare at it. What should I say? Set an alert in the area of plus and minus 1,000 and see if the alarm goes off. And that's it. Right. All righty, everyone. For those of you in the YouTube, let me give you guys a link to a presentation. And Dan, you can go ahead. I just want to find that link for next week, what I'll be doing for this Wealth 365 Summit. Be a great presentation to attend.
All right, good morning. Let's look at opens real quick. In the weekly, we're down just to 2 trades, EA put spread and EWZ. Both are fine. Our swinging options trader, this was a new core yesterday. Look at that, daily, weekly, monthly. Whiskey. MJ, we bought some puts on the breakdown. Man, it looks weak today. Very nice. Cal, Debbie thinks this is Continental Airlines. We shorted this. TSS, we're long stock. Band, we have a half lot long. Akamai, long stock. Broke out, looks good. Fizzler, covered call, that expires today. So let's leg into a covered call for next week. SPH, we're short, and I moved the stop to yesterday's high. Costco, we have a 3rd position left. We're just going to trail it. RVLV, long stock. CMG, put spread. Whiskey Papa, long stock. I'll be raising the stop later today. Cody, long stock. Run, long stock in the solar sector. RPD, covered call. I moved the stop to Wednesday's low. JPM, we entered yesterday, and there's a number of them that we're waiting for entry. We're going to short this thing under 15. It looks horrible. IRM. We're shorting under 29 under yesterday's low. And we'll watch it on a bounce. EVRI over the high. This one came from Debbie. And diamonds into the close. I said, let's buy today over yesterday's high, and it's gapping up. So we'll watch that on a pullback. And Greg posted NMRK. We'll buy over the high. Look at this snap. We had long calls on this, and it was acting really bullish yesterday morning. And I tightened the stop, and look at that. It stopped us out just by a few pennies. That's well, no, into the afternoon it would have stopped us out also. But it's, you know, nice gap up today. Let's look at other gappers here. This is a penny stock toy, but this was a very bullish setup here. You got a little W bottom with a beautiful close right there. That would have, you know, but for the gap up, that would have been a buy over yesterday's high. Yesterday's low is a stop. But, you know, we're not messing around with it. Gappers. 1660. Gap's too big. Wow, look at the fighting that's going on with these bull and bear sandwiches. Wow. But all that fighting is now support. Bud down. That was a nice Bear Island reversal. LaDon, I don't know if you're here, but remember you asked me about something yesterday, and you know you can drive a window through each side here. That's an island snapper we talked about. 122. Here's another penny stock toy. No interest. But see, there's no pattern on this one. Whereas that other one I just mentioned had a beautiful, beautiful daily setup. SFIX, you know, deep pullback here, but it's gapping at 30 bucks. Nah, I got no interest. McGraw, remember we were trading this, eat this marijuana ETF? Ooh, that's a nasty gap. Might be time for a call spread, but it's on support. McGraw, you asked me about this one, MFeed. That's a big gap. Even though it's not big in terms of dollars, it's big in terms of chart. Old hook, had no volume here, 878. I think this might be a bio, but 30-minute high, that's an idea. This thing getting whacked, 308, way the heck down here. Let's keep an eye on this. ILMN. PNM. There's no volume. Save. This is an airline. Nothing. ALGT. If this can go sideways for a couple more weeks, it's a reverse head and shoulders, but I don't like the way it trades, so you're out of here. Mercy. McGraw, you asked me about this. I like it. It's breaking out of this big base, daily, weekly. That looks good. No-brainer put spread, too. This trade's like garbage. Berman, I can't tell what you're doing. Hotel India, 3385. That's a nasty gap. Nothing to do with it. MCRM, I already looked at. MKC. Over yesterday's high, it's been underperforming the market, but it's here on support, bottoming tail. IHF had a big old gap yesterday. Oh, this was the ETF that I said, you know, target 180 to 190. Semis, I want to keep an eye on this to do a put spread for next week. PSMT, look at this crazy action. This was a gap down yesterday we looked at, but it was a bull 1, 2, 3, 1, 2, 3, 4, gap down, negated. There's nothing to do with it. I just wanted to show you that crazy price action. Lima Kilo, I'm watching if it can break out of this consolidation. LBS, I've been watching. It did actually trade above Wednesday's high and got slammed back down. So I'm kind of losing interest in it now. And that's it. Perfect timing, 9:29. Hey, if this can trade above yesterday's bar, then we got ourselves a red bar ignored. And then all of this, high 2681, then all of this will be support. So that's worth watching. And market's coming in here a little bit, which is fine. Diamond's holding up the best.